All right, guys. I know I've made a promise that I'll share whatever I said that I will share on Facebook. Okay, I think I'll do it again on Monday, guys, when the market opens. But now I'll just have to share you guys the classes that I've done with my new clients. I'll be sharing with you guys the classes we do, which is very, very important to me, guys. It looks very easy, but it's very, very important. So don't get fooled, guys. This one also help you, and it's for beginners. You think you know this, but you don't. Trust me. So let's get to it. So the bullish pin bar is rejecting lower prices. Obviously, it's gonna be something like this. It's gonna be a small. It should have a small body and a long tail. So if you're buying here, your stop loss should be below that pin bar.
Okay.
Yeah, and then your take profit will be here.
On top.
Before a few pips before, few points of profit before the resistance.
For the resistance. So you wait for, because sometimes not most of the time I normally wait for H4 a candle equal. So
Yeah,
you have to wait for it.
exactly. That's the strongest ones. You see on higher time frame, H4 is higher time frame, and then H1 going down is lower time frame. If you wait for confirmation on higher time frame, that's the strongest signals. They don't fail that much, especially on daily, especially on higher time frame.
Yeah.
So from here going there, you will get like more than a lot of entries because price will be doing this, going to that resistance. So this will be your first buy, second buy, third buy, fourth buy, the fifth buy until it reach that one level there. But first of all, but the confirmation you get it where on higher time frame. That is going down. So if you go to lower time frame, can I show you? Can I show you? Okay, but I'll show you now. But the confirmation you get it on higher time frame. By what? So if let's say for an example, we have this pin bar. Okay, we are buying there, right? Stop loss below this low. See, man, after every breakout, price should retest to that level, to a certain level, 61.8 of your Fibonacci before it continue going up. Okay.
Yeah.
09. Here it's a pin bar. If you go to with only this pin bar, if you go to lower time frame, it's gonna be something like this. It's gonna be something like, let's say, sorry, let me just draw nicely. Let's say this was a trend line going down. So it's gonna be something like a breakout and the retest and then going up to that level. So this from here to there, it's gonna be your pin bar. So that bullish pin bar, say it's a small body. It's like this. The next candle that will open here will be like this. Okay, may be like this, and then it's going up, right? But the entries you can get it here on that shade, in that shade here. This will be on H4. This will be on H1. So your entry will be here on H1. If you go to H1. Okay. Well, understand?
Yeah.
Because
I do get you.
Understand this, man. There's gonna be a retracement. Okay. So every candlestick, it has its own retracement. See, even if it's a mere bull candlestick like this, it's a bull candlestick with no meaning, like this. Bulls pushes price up. The next candlestick that is gonna be doing this. So this here, it's your retracement. You'll find out that, okay, let's say this one is on H4. You'll find out that, okay, on H1 there is 4 candlesticks going up like this. So don't mind my drawings, man.
No, it's all right. Yeah,
it's gonna be 4 candlesticks like this. You see, and then this retracement here, this small retracement here, will be like will be like a candlestick here, maybe one here. You see, and then we start buying it there, going up. We buy them there, going
up again.
And they're gonna continue going up. So this is what I'm drawing here is what I'm trying to explain here. You see, our entries will be here, our entries will be here, our entries will be here on dollar. Here,
Yeah.
your entries.
At the tail, yeah.
If this 4 candlestick is a pin bar, on H4, this is a pin bar. This is on H1, this is a candlestick. This movement will be this 3 candlestick going down, and when it reaches this level, we'll be buying it going
shooting up.
Okay. So
yeah, it makes sense. Yeah.
So you're gonna be trading. Sorry, you're gonna be trading like a pin bar. If you do what? If we have the pin bar is gonna be at your support and resistance. So now there is a combination between a pin bar, between support and resistance, and 2 pin bars. At your resistance, we only look for bearish pin bar. It should have a long tail, small body, and a nose. That's a fully formed candlestick. It should have 2 contacts, which is a nose, small body, and a long tail. The long tail, that's the one that tells you that it's been trying to push price up. If it's trying to push price upward at the resistance, it's been trying to break that resistance. Okay, when it tries to break the resistance, it's trying to do what again? It's trapping the buyers. Okay, it's hunting the stop loss. Let's say, for an example, this is your resistance. Okay, price is down here. It's down here going up. Okay, people do what? People sell at the resistance. They want to
at the resistance.
Yeah, they want to sell price going down. Let's say your resistance. So people will just press sell there. So most of the time, the market makers use these candlesticks to hunt the stop losses. You see, pushes up, hit all the stop losses there. Okay, and give you a sell signal. Because they know that how retail traders trade. Okay, you're not gonna be taking that trade because already you are running on you already hit stop loss. Once you hit, most traders, once they hit stop loss, they're no longer gonna look at that pair. They jump to another one. So like psychologically, they know how to trade, how we trade. Okay, so they'll hit your stop loss and give you a sell signal, but you won't jump in. Okay, so the only thing that you can do now, you can just press sell here. Okay, your stop loss will be there. Okay,
or just above.
Yeah, a little bit. Don't touch that pin bar, and then here is good. It's your nearest support, as you can see. Okay, so on that nearest support, then we are getting out. So from here, we're expecting price to go down, and then a few pips before we are getting out. You're taking our profit. Okay.
Yes.
Yeah, we're only going to be risking this, the length of that pin bar from the entry, and then this will be our target. So that's how risk and reward works. Okay. So another thing that market makers do, that I think they do, another thing. Okay. So this is your resistance. You see a pin bar, right? And then they can do this. Another candlestick will open. Remember, we are on a sell because of the pin bar. They know where you place your stop loss. They push price up, hit that stop loss again, and then close like that. Okay, so what do we call this one?
I say engulfing.
No, it's a combo signal. It's two signals at the same price, at the same level. Yeah, we call it combo. So it's 2 signals. But because they know that if you hit the stop loss, your emotions won't allow you to go back. You see, they will not, your emotions won't allow you to go back. You won't be taking another sell here. Okay, with a stop loss there. Whereas you should do exactly that. Because they take you, they hunted the stop losses and give you another sell signal. Yeah. So you should know that, okay, here, for an example, people will be selling here. We'll be selling here without any signals. We'll be selling price to go down with the sell limit. Another people we trade differently. Another people will be saying, okay, once it break the resistance, it's now gonna stop on the next one.
On the next, yeah.
Yeah, so they'll be waiting with pending buy stop pending orders, thinking it's gonna break the resistance and continue going up. Okay, so they are trapping the buyers to do what? They're hunting the stop loss and also they're taking out the sellers and also trapping what?
The buyers.
The buyers. So they come down and close with the pin bar. So once they close with the pin bar, that's when you should sell. When you sell, your stop loss should be on. Don't touch the pin bar. The stop loss should be like few people. Don't touch the pin bar. Whatever you do.
Just above.
Yeah, just above the pin bar, the tail of the pin bar. And once you're done with the stop loss, if they give you something like this again, it's another sell signal. Okay. It's another sell signal. So you just have to jump in, because I'm trying to work with you here on how to control your emotions, on how to look at the market the way I'm looking at it.
Yes.
Just because you hit the stop loss doesn't mean that trade has failed. So they might come back and give you another signal, but because they know that emotionally it won't allow you to go in again, they will give you the signal, and at the end of the day, this is what you get. Okay, so this one here we call it a combo signal. It's very easy.
A combo signal.
Yeah, it's double signal at the same time. If for me, if I tell you, if I went here with 0.10 and then they hit the stop loss and give me this, I can go in here with like one lot or 0.50, 0.20, because I know that now it's double signal. It means they are really rejecting higher prices.
Higher price.
Thank you very much. Let's continue. So the next candlestick that we're doing will be an engulfing. You know the engulfing candle, right?
Yes. I want to engulf here.
How do you understand it?
Engulfing color is engulfing color. There are the signal ya buy ka sell like.
No, I agree. There's two candlesticks. You should now understand how important this one is.
The engulfing candlestick.
Yeah.
Yeah.
The engulfing candlestick, it means it's change of direction.
So is either it's changing to be bulls or bears?
If the market was moving up and then you see a bearish engulfing, it's gonna change direction now. It's not gonna go up anymore. It's gonna go down. Okay. You understand?
Yeah, I understand.
That's well, yeah, okay. So there is rules on engulfing candle. It means engulfing candle, the significant engulfing candle, the body of that candle should be bigger than 3 or more previous candlesticks.
So that means
yeah, exactly. So let's say we are on bearish. Let's say 3 candlesticks are pushing down like this. See, so sorry, at the resistance, you'll see a candlestick which is bigger than this, with the body that is bigger than
the other 3.
See, just like that. So it means now it's doing what? It's changing directions. It's no longer gonna go down. It's now gonna go up. Okay. So this here is your signal to do what? To buy. Okay. This will be your signal to buy. So this is a bullish engulfing candle. Look at this. Focus only on the body. This body of the candlestick. This body of the candlestick is bigger than these 3 previous candlesticks.
Yeah, than the 3. Yeah.
By 1.
Yeah. So into making a signal, okay,
you just buy it straight away here. Once it closes, you wait for it to close. Once it closes, confirm that okay, I'm a bullish engulfing candle. I'm changing direction. I'm going up. Okay, you just buy it straight there with your stop loss there. Okay.
Yeah.
I want to show you something very interesting and very, very nice. Look at this 3 candlesticks here. You just join. You draw a line. Join 1, 2, 3. What do you see?
Oh, yeah, breakout there.
Breakout. So let's say this one is H4. Let's say this one is H4. Okay, let's do the H1.
Yeah.
On H1, this one will be something like this. And then the breakout. See? Change of breakout. You see? So this here going up will be this here. This engulfing candle will be the 4 bullish candles from here to there. Okay? So the next candlestick that will open here. The next candlestick that will open there will be a bullish candlestick, yes.
So when we buy after breakout, yeah, this descending horizontal line here, descending line, re emela breakout first.
On H4, we get like a confirmation that is now gonna go up.
Yeah.
Okay, and then on higher time frame, remember, once we have this, we had a buy here. Okay.
Yeah. Yes.
Yeah. Now we're gonna look for the next entry, the next buy entry, which is gonna be this one. We'll wait for bears to push price down to this one here. Okay, and then we buy it there. Then we buy it there going up. So our next entry will be here. So we'll have 2 entries. First one, which you get on H4 after this candlestick close. Don't ever listen to me nicely. The reason I'm saying we buy here again with a candlestick, even though we know that it's gonna retrace after this one, we use the engulfing to buy it on a higher time frame, and then we'll get another buy entry here on lower time frame.
Okay.
Because we know that every candlestick should be. This will be one candlestick on H4, and then on H1 this will be a retracement here. Will be this retracement, and then the entry will be here. So we'll have another entry here, buy here, and another buy here, buy here, and another buy here. The reason I'm saying buy here, your stop loss will be below, which is this one.
Yeah.
The engulfing, even if you buy here, your stop loss will be that level there.
That level, yeah.
And you don't touch this level. Sorry, you don't touch this level. And if you're buying here, if you're buying there again, your stop loss will be same level as that one. So the one that you'll be risking less will be this one. The one you'll be risking more will be this one. So if you go with if you go with 0.05 here, it's easy for you to go with 0.10 here on this one because the risk is more. You understand?
Yeah, it's more. Yeah.
That's the most easiest way on how I can explain this.
Aye, excellent. So
on the more price fail to break the support, the resistance. Price failed to break there, it went up, come back, failed to break, it went up, come back, failed to break, it went up. And then when it breaks that level there, it's gonna retest that level
first.
Before it's continue going down. The last respect, we want that sell here. Very important.
Yeah.
Yeah, it's very important. We'll do this like every time we have chance. Went in for something, cut it short, make sure you understand it, and then we go back to go through the chart, you practice it, you come back tomorrow or the next day, any day you are free, and then we'll keep on. We'll make sure that you understand what we did, like on the previous class, before we continue on the other one.
Yes.
Yes. So another thing that you should understand about the candlestick, that's why I'm saying you should always learn the candlesticks. Not anyone can teach you the candlesticks nowadays because they think they are very easy. So the baby pips that you read or something, it will say, okay, sell here, which is very correct.
Yeah, sell high.
Sell there, okay, which is very correct. Where is your stop loss? They say 20 pips, risk 2% of your account, which is 20 pips, is somewhere here.
Yeah, they normally say 20 pips, yeah.
Some will say 50 pips, which is somewhere here. You rather hide your stop loss here. on top of that level there, which is there, right? So my stop loss all the time is somewhere here. No questions asked. Okay, if my stop loss is there, my first take profit is here. Okay, so if you look at the risk and reward, it's 1:1. You can still 1:1. You can still risk 100 rand to get 100 rand.
100 rand, yeah.
Yeah, people will try this here. You are risking 2 rand to get 100 rand. You are risking 20 rand to get 100 rand. I risk 100 rand maybe to get 120 rand, which is this level here. You see, still risk and reward. But because I know how the market, how the channels, how the patterns moves, this will be my first take profit. My second one will be this one. So my entry eventually will be 1:2. Okay. Will be 1:2. Okay. So I'm risking 100 rand to get 200 rand. By one. Very, very simple. So this here, mostly this happens. Okay. Something like that. So look at this. So if you look at this level here, look at this from here. It took all the stop losses.
Yeah, all of them are out
before they continue going, pushing price down. So mostly they use pin bars to hunt those stop losses. Okay, you are safe if you went in here without the candlestick. You went in here with the sell without the candlestick, and then your stop loss will be here, right? And then now it does what? It went up to hunt those stop losses, but doesn't touch you. It came back and closed with a bearish pin bar. It's another sell and another sell now.
Yeah.
You sell it again there with a stop loss there. So you have 2 entries now, which the second one, the risk will be this one. The first one, the risk will be this one. So you are holding that all the way down.
Okay.
It's very easy.
No, it makes sense. It makes sense.
So now you go back to your chart, you practice using this. Don't forget the rules that I told you. You practice using this, and then you come back again. We'll do this again before we move to another thing.
To another one. Yeah, no, it's fine.
So yes. Thank you very much for being patient with me, my man. And then I hope you understand this one quickly. And then if you have any question, just WhatsApp me, my man. I'll send you the videos.
Yes, I'll WhatsApp you.
I'll send you the videos on your emails, and then you can practice. You can check it again, and then keep on looking at where you've been doing wrong. All right. So thank you very much, man. Today, have a nice day. I'll see you again when you see me.
No, thanks, Bruce. Thanks a lot, bro.
Sure, man.
Sharp.